Happy New Year. We hope you had a fabulous break and it's back to reality. So that can be a really good thing. This year is going to be a fabulous year and it's all about lifestyle. So we'd love to hear from you actually. We'd love to hear about some of the things that you would like to do this year that you haven't had a chance to do for the last couple. If we can help you at all, we'd love to be a part of it. So you'll hear much more about that as we go on over the next few weeks and communicate through our new Facebook page, by the way. So make sure that you become a member. One of the things I really want to cover off as our preliminary hello this year is the market. So you know that there's been some really interesting media in the market, and it's very important for us to address that, even though we are not worried about anything. There are three things that I'd like to cover. Number one, I'd like to cover off what exactly is being said in the media, and number two, I'd like to talk about what the reality of the situation is and what's underpinning this bad media. And number three, I'd like to talk about what you should do about it. Okay, so what's been said in the media is point number one. And I'm not going to labour this point because I know you've all heard it and you're probably still seeing it. It's about the biggest property crash since the global financial crisis. Well, there wasn't a property crash after the financial crisis, the global financial crisis. It's about huge drops in Melbourne and Sydney, and all the banks are increasing their warnings, etc. So that's what's being said as headlines. But let's go to number two, which is much more important. What are the fundamentals underpinning this, and what's really happening in the market? Well, the fundamentals are this: the population growth is still increasing at a rate of knots. So we have the biggest population growth in Victoria in particular. In Australia, we have mammoth growth when we compare it to global growth, and it's still a wonderful place to live. So population growth is one of the biggest contributors to property price growth. So yes, tick, we've got that in terms of a good property market. The other thing we need to remember is access to money. Now, we have very low interest rates, which is like, that means that's access to money, if you like, so it's cheap to access money. But the problem is we have this thing called the Banking Royal Commission. In the long run, this is a good thing for consumers because it's putting the banks under the microscope of the watchdog and making sure that their policies and their procedures are fair on the consumer. In the short term, it's meant that the banks have really tightened their banking policies and their lending criteria, which means that it's harder to get money. They're looking at things like your spending habits. They're putting under microscope historical credit. There's just a lot more that they're considering in the short term. Now, we expect that to loosen. We've been through these sort of things before. Already the Reserve Bank is saying that this whole process has had the desired effect, and they are intending to loosen the restrictions around investment lending criteria this year. So they want to inject a little bit more buoyancy in the market. What has it really done to the property market? What have we really seen? They're talking about these huge drops in price growth. Well, let me give you some examples of markets. And if you pick most markets in Victoria, you will find that they may have lost 5%, but it's usually one particular type of property. So for example, in Richmond, the unit market has dropped by 2%. However, the overall house market has actually increased over the last 12 months. Certainly, there are some house markets, even like it might be 3-bedroom houses, have dropped by 2% over the last 12 months, but the median price for all houses has actually increased. Now, we are having less and less sales in the market at the moment because of the issues that we're experiencing with the credit crisis. And so we don't have the sort of numbers that we usually have, statistics to demonstrate a true result, if you like. So the media is selecting exactly which figure they want to report. So they can choose statistics to really give you any story that is going to sell papers, which is of course what they do. The reality is many markets in many areas and localities have actually increased over the last 12 months, and some of them are still increasing, certainly not as much as they were, but are increasing month by month. Now, we don't want the growth that we had over the last 12 or 24 months. If that sort of growth continued, we would have a massive problem in the market. It would definitely overheat. So this softening of the market is a wonderful thing for investors. Okay, so number 3, what should you do about it? Let's assume that the market was in dire straits and certainly dropping 10%, and we forecast for further huge drops. We would say to you, do nothing. Do absolutely nothing, because if your property has lost 10% value and you sell it today, you are crystallizing that loss. And so you are making sure that you experience that loss. You hang in there and you can afford the repayments on your mortgage still, and you have a tenant, and the whole thing is still not affecting your lifestyle and is still affordable for you. The best thing that you can do is hang in there. You know that the market will return to a much better growth like it was maybe 5 years ago, etc. It will come back. And if you can just hang in there, you will experience that property growth that we expect. Now, remember, this is not a 6-month investment. This is a 10-year plan. Is this going to affect your 10-year performance? No, it won't. And if you are in it for 1 year, you should never have invested in property in the first place. So if you have any questions, we would absolutely love you to email us, call us, get on the Facebook page and make some comments or messenger us. We're there to help you, and you'll certainly be hearing from us shortly on the telephone if you haven't already. Have a wonderful 2019.